Look, in Mad's true fashion, I am going to be absolutely real with you. You have probably been drawing support and resistance wrong for years, and it's probably not even your fault. So, every YouTube video, every piece of content you see will tell you about support and resistance. Price comes to a level of support or resistance, it bounces, and you make profit. But it doesn't work like that. Because if support was that strong, why does it break all the time? And if resistance was that sure, then why are you constantly blowing accounts? Why are fake outs ruining your mental health? I have personally been trading for almost 12 years, 6 of those exclusively with prop firms. And I'm going to be real with you and tell you something that took me way too long to figure out. Support and resistance isn't about lines. It's not about indicators, it's about memory. And once you can understand that, I promise you, the whole thing will change for you. Guys, it is Mads the Trader, pure price action and GBPU specialist. So let's get into how you use support and resistance properly. So we're going to start off really simple. So I'm just going to show you how I personally draw support and resistance. So you guys can kind of see exactly what I'm explaining as I'm explaining it. So I use, on the brush tool, you want to go down to the shape section and you want to go and find a triangle, a rectangle, not a triangle, a rectangle. And then what you want to do is you just want to start marking out areas of support and resistance. Now, these are areas that you can see price is clearly attracted to. Price comes to these levels a lot. Price does react from these levels every time it comes to them. Some may be super small, some may be a lot bigger. But the importance is that you're drawing areas of price, not just a straight line. Because a straight line, price isn't always going to respect it. The market is manipulated. If you don't understand how manipulated the market is by now, then I don't know for you, but here's your lesson, okay? So as you can see, price is literally just bouncing between the support and resistance levels. So support is essentially the floor and the resistance is essentially the ceiling. And as you can see, price just bounces up and down between them. Now, what you can see when we come to areas of support, so let's start with the support. When price comes to areas of support, these are usually places where long-term investors have already bought. So when price comes back down to this level, they know they've already bought in at that price. So what are they going to do when price comes back there? They're going to buy again. People who are new into this position, they're going to see that price has reacted from that area. So what a trader's going to do? They know from memory that this is an area that they need to buy from. They can see this on their charts. The people who are already in, again, remember from memory, this is where they bought. So when I say memory, when it comes to price action, this is what I mean. Price knows, well, not price, but the traders know that this is what is going to happen when price reaches a certain level. Now, it's literally as straightforward as that. So, just to sum it up, when price gets to resistance, most likely it's going to sell off. When price gets to support, most likely it's going to go higher because sellers remember that that's where they sold and buyers remember that that is where they bought. And they want to get in again because why not? Memory. This is built into what you can see on your charts. It is simply the trader's memory. Now, I've stepped down to the daily so I can show you guys a little bit clearer as to what I want to talk about next and what is really the reason that you guys are getting caught out while you're blowing accounts and why trades just aren't going the way you planned. So I'm going to start off by saying, just reiterating the fact of support is the floor, resistance is the ceiling. And another thing I'm going to throw in there before I actually step into this is what was once support will become resistance. What was once resistance will become support. Let me walk you through that part. So I am just going to draw up some more areas of support and resistance on this chart here. So again, just so you guys can visually see, a lot of this for me is just very clear. I don't really draw too much on my charts anymore unless I'm teaching, because I just don't like things being on my charts. If I'm being for real, I don't like the mess. Yeah, no, it's just not for me. So what you're looking for is just areas of price where price you can clearly see that price is attracted to. Price comes back to these levels. So let's talk about what was once support becomes resistance and what was once resistance becomes support. So as you guys can see, we have a really, really strong level of support sat here. Now, not much has happened here in terms of the support and resistance change. So what we want to look at is the next one that we can see up here. I'm going to step down to the 4-hour so you can again see it a lot clearer. So here we can see that price is very choppy. So this may not be the best example right now on GU, but we're going to get there nonetheless. So you can see here, for example, we have came to this level here, down here on this 4-hour chart. We've come to the resistance once, we've dropped down to another level of support, we've come back up and we've retested that resistance again. Now, you can see that price has completely rejected that level. So again, once sellers got back to this level, they can see, oh, I've already sold here, so I want to sell here again. This will also be people probably getting out of break even because they've been in a loss and they just want to get out. So this kind of triggers the market to have this little fall off. Now, what you can see is after this fall off, price had huge momentum to be able to push back up. Now, why? Because if we step down here, we can see that the same thing happened here. We also had a level of support and resistance that was broken. Now, price came up to this level here, rejected it, and then it broke through it. Then what did it do? It came back and it retested the broken level of resistance. So I'm just going to move it down just so you can see a little bit clearer. But that is essentially what happened. We came up here, came back down, and then tried again, came back down, boom. That's where it found momentum. So we can see from this candlestick alone, this has broken this last level of resistance. Now, what happened after that? You can see here on the 4-hour, we actually came back and retested that broken level before we continued pushing to the upside. If I come to the 4-hour, you can see even clearer. So pushed through, came back down, retested, and boom, to the upside. And this, put simply, is literally just market structure. So this is just the forming of the higher highs, the higher lows, and the higher highs. Higher low, higher high. That is all this is. And this is just giving you areas where you can actually get into a trade. So you know once a level of resistance is broken, you know to wait for that retest, and then you know you can probably get in a really nice trade with not really thinking about much else. Like, this is a really simple way to trade just pure support and resistance, which is literally just pure price action. Pair that with some candlestick patterns, some candlestick formations, and Fibonacci, and you have just built yourself the perfect trading strategy. And this is built off of pure price action. This isn't using any crazy indicators, which, by the way, guys, I do not recommend using any indicators. I know a lot of people say that Fibonacci is an indicator. Say what you want. I don't believe it's an indicator. It is just literally a piece of price action. So this, guys, is just essentially market structure. The support and the resistance is building your market structure. So now I'm going to show you exactly how I would be trading support and resistance. So as I said from the beginning, we're going to start from the monthly chart. So now you guys have the understanding of how this actually works. Let's do a full top-down analysis. So starting on the monthly, I've already drawn my levels here on the monthly. There's not really much else that I would be drawing here. Maybe another one just down here. But that is pretty much all I would draw, which price is currently at this kind of level right now. So it is low-key relevant. So yeah, so that is on the monthly chart, that is all I would draw. And even when I'm implementing all of the other pieces of analysis that I use, this is literally as far as I go on the monthly. I don't want to see anything else on the monthly other than my areas of support and resistance, which are just my areas of interest. I want to see what happens when price hits those levels. I'll then step down to the weekly. And again, that's all I want to see. I just want to see some areas of price, where price is at. And to be honest, I don't think I would even draw anything else on here. Because why? Because there's no point looking all the way left. Like, we've just done that on the monthly. We don't need to see much else on the weekly. Price is currently very much consolidating in this very small area. So that's all we're looking at right now. We're then going to step down to the daily chart, and this is where we can start kind of building what we want from a trade, what we're looking at getting in for the day. So here you can kind of see better as well the kind of market structure that we're looking at. Right now, we are particularly trending to the downside. However, we have hit a huge level of support, which I have been trading off the back of. Now, another important thing to note just before I move down to the lower slides is that, lower time frames, is that you don't want to trade when price hits that level of support and resistance. You're trading the reaction from that, which obviously you need to implement a lot more than just the support and resistance. You can use the support and the resistance just on its own, but you don't want to trade literally when price hits that level. You want to wait for some type of reaction, which is where I personally implement, as I just mentioned, the chart patterns, the candlestick patterns, and the Fibonacci more than anything. So that's currently what I can see on the daily. Again, I'm not really trying to draw too much on the daily because we've already got our weekly and monthly key levels. So we don't want to overdo it. Again, I'm very OCD. I don't like my charts looking too messy. Now, the next thing that we're going to look at is the 4 hour. So again, this is kind of the area where we're looking at, right, okay, I can kind of work out what price is doing here. Like, we're trending up, we're trending down. Now, on this example in GU, at currently where price is, you can see we've had a massive bullish push to the upside. So from here, what am I going to be expecting? I want to see some type of pullback. Now, in true GU fashion, could this just continue pushing to the upside? Absolutely. But I am placing my bets on the fact that price is going to drop lower. And how do I know where it's going to drop from? Well, we have the next level of resistance that was broken. We have a level of resistance here that we have just identified. So what can we expect? We can expect a reaction from this level here, possibly back down to the last level of resistance that we broke through. Now, yes, price did react before pushing higher, but again, GU fashion, I know my pair, I know the characteristics of my pair. Price will very likely come back down to this level, retest, before shooting even higher. Now, this is very simple for me to do because I have been doing this for almost 12 years. It might take you guys a little time to adapt to trading support and resistance like this, but it's very simple once you can wrap your head around it. The thing for me is that you don't want to have just one line of price where you think price is going to come to. It has to be an area because price isn't perfect. The markets aren't perfect. And low key, the markets are low key out to get you. Let me tell you. And this isn't me saying that market makers know where your stop orders are because I promise you they do not. But is market manipulated? Absolutely. So what do you want to be looking at when you're looking at getting in a trade? So what do I mean when I say you want to wait for the reaction and trade the reaction from these levels? So what you're looking for, which is the main thing that I look for, is number one, a Fibonacci. So I want to see some key level of Fibonacci that gives me the confidence to get into the trade. Now, we had a lot of fib moves up here until we had this massive breakout. Now, we're kind of awaiting something to happen for us to be able to get another fib. But what else can we look at? The next thing that we can look at is candlesticks. Now, in this example here, we can see very clearly that this 4 hour, that is very bullish. This is hugely bullish. And what does a bullish candle tell us? We're probably going up. Now, this isn't just a bullish candle. This is also a bullish engulfing. This has engulfed 5 candles in 1 4 hour move. Now, this is momentum. This is powerful. This is the type of thing that you want to get into when you see this move. So you've got the broken resistance here, the huge bullish 4 hour candle. You've then got the retest. That's the perfect entry. That is the perfect time to get into a trade. As soon as you see this candle here, particularly on the 4 hour, you know what to do. Price is going to go to the upside. And that is literally the most basic B-Tech level stuff in terms of trading price action. It obviously can get a lot more complicated, but keeping it super simple, that's it. That is it. If you could pair that, now I'm going to get a little bit more complicated, but if you compare that with like a head and shoulder, inverse head and shoulder in this situation, because inverse head and shoulder is bullish. If you could pair this with a double bottom, if you could pair this with a falling wedge, with a falling channel, all of these things go hand in hand and build your edge, build your strategy. And just to kind of highlight that little part, it's that you don't trade the actual breakout, you trade the retest. So as I mentioned, this is the breakout. This is the breakout candle. This is where you have to be patient. This here, that's the retest. That's when you can get in. So this isn't like, oh my gosh, I can see a bullish candle, I'm gonna get in. Oh my god, price is going to the moon. Like, no. You need to be patient, you need to chill. That is where you're going to blow your account. That is where you're going to get yourself in a mental hellhole. And trust me, I've been there. It's not cute. So just to summarize all of that, because I feel like that was a lot in a quick 20-minute video. Support and resistance, it is an area. It is not a straight line. You want to trade the area. You don't want to trade the breakout. You trade the retest. And I promise, if you can implement just these small things, you will see a huge difference within your trading. I will also be creating a video on the actual mindset behind these things, because a lot goes into actually executing this. Patience, discipline, trust in your strategy, trust in the markets, trust in yourself. So many things go into building this perfect strategy other than the strategy on the edge. Your mind can be your biggest asset or your biggest weapon in trading. And let me tell you, I have experienced both sides of this. And support and resistance is really the fundamental basis of trading actual price action. Like, yes, we can use the Fibonacci, the chart patterns, the candlestick patterns. We can implement all of this. But if you don't have your support and resistance on point, none of that matters. Nothing else matters. I have been trading for almost 12 years. And if there's anything you're going to listen to when it comes to the things that I say, let it be this. Support and resistance is crucial if you're trading price action. If you're trading ICT, I don't know, stick to your supply and demand or whatever he calls it. Real price action traders, this is where we're at, okay? This is what we need to know. This is what we need to build off the back of. So guys, thank you so much for watching. If you would like to see more videos from me, then please make sure you comment below. Subscribe, hit the like button, comment, do all of that for me. I am really trying to be consistent with YouTube, and yeah, if you guys can support me, that will really, really, really help me, because me sitting in front of a camera is kind of wild. Unless someone is in the back directing me. So guys, as I said, please, please, please like, comment, subscribe, and hit the bell, and drop a comment below and let me know what you guys want to see from me. But this is just the start of the price action series from me, Mads the Trader.